Good morning, traders. Today is August 1st. This is Brad Matheny. This is the Plan Your Trade video. We are right now at this base rally 301 pattern in trending mode. Nothing has changed yet here with the biases, so we're going to wait and see what happens there. Oops, keep that active. Come back here. We're looking at a move in the markets that was quite impressive back over here. What I wanted to highlight was this blue line right here filling this gap window. So not only did we fill this little gap window, let me move this out of the way, we filled this upper gap as well. So now the base rally 301 pattern is likely going to prompt, I'll leave these here for now, but is likely going to prompt a base pattern setting up somewhere like this, maybe in the morning, and then rolling higher. And of course I drew that wrong, so we'll do this a little like this, and then a rally mode into the end of the day. Given the fact that we're already up at 502.80, we had been higher, this is more than likely going to set up somewhat like, somewhat like this. Maybe getting up into the 556, maybe getting up into the 557 area, more than likely up into this 554, 555 area. But the base rally is more so rolling down, setting up a base, and then rolling up into a bullish trend. So when we look at this, what we're really looking at is a bit of downward activity after the open, setting up a base maybe around 10 or 11 Eastern time, then rolling into decidedly bullish trending, likely moving up into this window here. You can see this window right here, likely moving up into that 555 to 558 area, maybe. So possibly targeting this area here by the end of the day. So we're going to have another fairly solid rally day, it looks like, and we're still in that larger Vortex Rally move. So I need you to be aware that we're really building momentum right now for a pretty big rally phase. We have cleared the lower support channel down here that I mentioned earlier, how we had this longer term support and longer term channel. We defended this support area here, which I will highlight in a light green. We defended that support area there very well. And as I've shown you with my new trading tools for mint.com, I want you to pay attention to how, and I've changed the markers. You can see these big diamond markers. These are now the larger, what are called ultimate triggers. So you can see that when we move into upward trending, we get a higher trigger from here to here, then a higher, then another higher, then another higher, then we peak out. You see how we've gotten to a peak over here? So now at this point, we've got a kind of a double peak setting up, and we've seen some rollover. The SPY is currently down in the 553 area right now, rolling a bit downward. Notice how the lows have rolled up too, from here to here to here. So we're now in this side, this is 10-minute. We're now in this sideways trading range, right in between these levels right here, trying to seek out a new high or a new low. Now remember, Fibonacci price theory says price must seek a new high. If it cannot, then it must seek a new low. And if it fails, it will revert back to seeking a new high. It has only one option: go up or go, actually two options, go up or go down. It cannot stay in this sideways range. If it does stay in a sideways range, it's essentially establishing new peak levels. This level over here or somewhere over here will create a new lower peak, and this level over here may create a new higher peak. But ideally, price in a sideways trend like over here, consolidated, tried to establish a new low, failed. Okay, it was not a new low compared to this lower low back over here. So what did it do? It reverted back to set a new high, then came back down, retested, tried to set a new low, failed, came back up, set a new high, came back down here to try to set a new low, failed. It wasn't a new lower low, it was a new higher low. So now we're going to see if it tries to move higher. Based on the base rally pattern that we have today, my assumption is that we are going to move, like I showed you here, up into the 556 to 558 area by the end of the day, maybe a little bit higher. And I would assume that we're going to go ahead and get a continued trending upward pattern after a bit of a shakeout this morning. So now you can see how this is working and how lower lows indicate downward trending, breaking previous channels indicate downward trending. So you can see that when we broke this channel, we were clearly in an uptrend, still in an uptrend. We have not broken down. And this is going to be what I hopefully provide to you as a resource for trading. So again, I'm working with TradingView right now to make sure that I release them properly. It's going to take a couple more days to figure it all out and write up the documentation for it. But let's come back over here to this chart real quickly and take a look at the QQQ. Remember, QQQ is in a Vortex Rally as well. So here's the levels that I drew for the QQQ. We're likely going to be up in the 475 to 477 area. So again, possibly a base rally setting up over in this area, looking something like this, kind of a base, and then rolling up into higher trending, something like that, would be fairly solid. We could go higher. We could come up and try to fill this gap up here, but we'll see how that plays out. That would be a fairly big move today, although yesterday, like I said, the NASDAQ was up quite a bit. And so we can see how this goes. Even though I've drawn these based on what I believe to be logical, we could extend beyond them, okay? Be aware that these patterns were based back here on Friday of last week. I drew what I expected to see happen. This was the Israeli conflict in Lebanon, which might get even worse over the next couple of days. So when we get, outlier events, news events, please understand that the pressure of these outside news events, like the Kamala crush over here, can greatly deteriorate the accuracy of these price patterns. Like yesterday was a beautiful pattern. The flat down was a beautiful pattern. Today, we'll see how it plays out. And what you want to remember is, again, this scenario here, that's why this is so important. So we've got a 10-minute, we can go down to 3-minute or 2-minute, and you can see we're bullish trending, a little bit of rotation here, back into bullish trending, flat sideways mode, bullish trending across here. And again, it's fairly simple using Fibonacci price theory to see that when we're above this level right here, sorry, that's an arrow, then we should be technically dominant bullish trending. When we're below this level here, we are predominantly bearish trending. And until we get above that level or below that level, we are technically predominant bullish in a downward trend right now. So this is a counter trend to the predominant bullish trend. And once we get below it, like over here, we would be predominantly bearish, moving into a counter trend here in green, indicating that we're counter to the dominant trend, moving back in an opposite direction. So again, I don't want you to be confused about the actual patterns today. Understanding Fibonacci price theory and applying it to my patterns is one of the key elements to what we're trying to do as traders. So hypothetically, we come in here on a 5-minute. Here we go. This is our area right here that we need to protect going forward as bull or bear, okay? It's pretty simple. If we're above it up here, we're bullish. If we get below it, we're bearish, okay? That's it. And as these levels change, we will make determinations as to what's going on. You can see back over here, we had been above it for many days. You can see right here, above the level, predominantly bullish, above the level, predominantly bullish, counter trending, predominantly bullish, counter trending, predominantly bullish, counter trending, predominantly bullish. Now we'll see this morning. Okay, remember this morning we're likely to set up some sort of a base, maybe back down in this area before we rally up higher. That's what the base rally is supposed to be. Could be that we had this base here, could be that we establish another base here. I would expect some sort of pullback downward basing before the market starts to rally a bit higher. Okay, so let's come take a look at gold. I pushed up a gold video yesterday. We had reached a very, this is again a 5 minute, so let's come down here to daily. Yeah, we're getting this peaking pattern, and I had pushed up a gold video yesterday highlighting the fact that gold had reached my upper channel right back over here. Keep leaving myself in draw mode. You see how gold had reached this upper channel over here? This orange channel right here compared to this orange channel right down here. That's my flagging pattern. You can see it here. I'm going to make it a different color again. Trying to get these to stand out for you. Don't want to make it yellow. We'll make it light purple. You can see this flagging formation, this purple flagging formation, apexing right here. So we're up above that upper channel, and I've been warning people that gold would spike off of this base. It did. We're up near the upper channel. I wrote an update yesterday that we may get a little higher in gold, a little bit of residual momentum, maybe up in a 25.20, 25.25, but we're going to be rolling downward into this sideways channel trying to find a base over here. So be aware that, you know, we're moving into a transitional downward cycle trend. So we'll see how we play out. Lastly, let's take a look at Bitcoin. And Bitcoin was doing the same thing. I did a video a couple days ago about how Bitcoin had rallied right up and stalled here. Remember, I look for rejection. I'm looking for rejection. See how price came down, rejected, came down, rejected, came down, rejected, came down, rejected, came up, rejected, blew through the rejection area, came down, rejected, came down, rejected. We had a little confirmation, came down, rejected, and then blew through to the upside, a nice rally phase. So now that we've gotten this double rejection here, 1 here, 2 here, 3 here, and we're moving downward, I fully expect Bitcoin to trail downward into this area trying to find support. So I'm really looking for Bitcoin to move down into this 61.50 area, to call it 62, 63 area, and find support in this area before attempting to make another move to the upside. And that would be our final breakaway. This is our breakaway phase of this apexing pattern. And it looks like it's going to come somewhere near the end of August, early September. So looking very positive overall. So what we're going to do today, we're going to go back here to the SPY. We're at 52.65, coming down a bit. Come back over here, go to the SPY, go to a 2 minute, and we'll take a look here at the actual setups. So here we have the 2 minute setup with all of my drawing. Let's get rid of all the drawing. So you can see we're in a counter trend mode on the 2 minute. We are in a counter trend mode here on the 5 minute. You can see that we're coming down into the ultimate 382 level. Okay, we have not, this would be a good area for support. We are still bullish over here on the 10 minute, moving slightly downward, but we're not getting that major counter trend color, the pink color. And of course, over here on the 30 minute, we are in a continual bullish trend. We had been a little counter trending overnight, sideways trending yet, but you can see how we have been establishing newer highs, and now we're waiting to see if we get a nice new high. You can see here we've got these kind of double highs. This is consolidation, meaning price is trying to break away from this channel, which is right here. You can see this high up here to this low down here. And of course, we have the same type of setup here. The most recent ultimate low comes in right here. And so that gives us our basing level essentially between this level here, or it looks like, or maybe this level. No, I think it's this level. Let me come back and take a look. Yeah, it's this level right here. Okay, so we're at 550.63 roughly, and we have our new ultimate high up here at 553.44. So understand that we're looking at a bit of a pullback, trying to break out of that range. Until we break out of that range, technically, you want to rely upon the shorter term systems for scalping, and you want to rely on the longer term systems for trend trading. Remember, we are likely going to set up a base this morning. So understand that base is going to look like this maybe before we start to accelerate outward. And that's what I believe is the most likely outcome here. But you have very clear A and B success and failure ratios, essentially getting below right now 550.69 on a strong downward trend would be an indication that we're going to break downward. And this bullish rally may not happen. Okay, guys, that's it for now. I'll talk to you later.